Yo, investing family, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels, okay? And today we're going to be talking about is, I'm going to show you guys how to stop getting trapped. And what a lot of people don't realize is something called consolidation. So if you guys, are maybe looking for that breakout and the market snaps right back in, or you're looking for that sell and the market snaps right back up, and you're starting to get a little frustrated, I'm going to show you guys how to be able to identify consolidation so that you guys know how to avoid it. And if you do decide to trade within it, you guys have some parameters to abide by. So I'll catch you guys on the next clip. See you guys soon. Peace. All right, bet. So once again, everybody, back at it once again. Your favorite investor, official Tyree Samuels. So as I mentioned before, we're going to be talking about how to be able to identify and maybe avoid trading within a consolidated market. But before we do that, let me make sure y'all go ahead and hit that subscribe button, because I need y'all to let YouTube know y'all rock with your boy. You feel me? So without further ado, let's go ahead and show you guys how to be able to identify a consolidated market. So what I actually did was I took the liberty, all right, Statue of Liberty, to be able to pre-mark this up so we can save a little bit of time so it doesn't have to be, like a long video. So with consolidating markets, the first thing I want you guys to focus on is this picture that I have down here. So basically what I did was I created a ceiling, which is this top, and I created a floor, which is this bottom. The way that the market is going to act within a consolidative market, a lot of times you'll see the market come back to that previous ceiling, reject, drop back down. You'll see it come back to that previous floor or support, and then start going back up. But a lot of times it's going to stay within this range. So for any of you people that like to use buy stops, sell stops, or look for breakouts, consolidative markets are dangerous for those kind of trading styles. Okay. So a lot of times what some people like to do is they actually like to wait for the market to do what's called, confirming its direction. So you might want to see the market, break out of this range. Okay. Maybe retest this range. Okay. And then continue dropping in the given direction. Okay, that's going to be the safe way to play it. Okay, that's definitely going to be the safe way to play, because what can happen, and what I'm about to show you guys an example of, is if you're always trying to sell at the top of the consolidative market and buy from the bottom, a lot of times what the market is going to do is it's going to dip a little bit lower and it's going to hit your stop loss. Okay, because normally your stop loss is going to be right here. So the market's going to dip a little bit lower than your stop loss, take it, and then shoot back up. And then what you might try to do is you're like, okay, well, I'm gonna sell it when it comes up here. Well, what it might actually do is it might dip a little bit higher than those previous double tops, hit your stop loss, and then give you that drop that you're looking for. So what you might end up doing is being stuck in a consolidative, frustrative market, right? I tried to rhyme, it didn't really work out. So the next thing I want to show you guys is in a real life market with real candles, what would this actually be able to look like, and how could I identify it? So what I've actually shown you guys is, look at how many touches to this zone the market is actually showing us. Okay. So we have 1, 2, 3, 4, and 5. Okay. Now, what I want you guys to be able to focus on is, let's go back and look at each one of these touches so that we can see what is it exactly that Tyree is talking about. Okay. Let's go ahead and get rid of this real quick. So I think I want you guys to start noticing is, let me show you this real quick. Okay. So say this was our first area that formed a support. So what you're going to do is you're going to drag this over, and you're going to be like, well, shoot, next time the market comes back down to this area, I'm going to buy it. So say, for instance, you bought it here. Okay. It came close. You're like, okay, bet. Oh, yeah, it's lit. I'm making money. Oh, yeah. Right. And you're feeling yourself. So you're like, okay, bet. The market ran its course. It didn't, come back up and break this high. When the market comes back down again, I'm going to tag it again. What does the market do? The market actually dips a little bit lower, as I told you, than where you probably would have put your stop loss. Where would you have put your stop loss? Probably right here. And what did the market do? It barely dipped below it and then shot back up. This is going to be you being stuck in consolidation, because what some people are then going to do, they're going to start looking for a way that they can sell it. So they're like, okay, well, the market formed this high right here. What I'm going to do is I'm going to sell it when it gets back into this area. So they saw this market rejecting and they sold it. Congratulations, right? They definitely could have made money in this opportunity. But what's going to happen is, since they might not identify that they're in a consolidated market, they might try to take another crack at it. Okay. Similar to what they did here, they're probably going to try to do it again. But what does the market actually do? So similar to how I explained, what the market actually did is, if you see, your stop loss probably would have been somewhere in this area. The market came a little bit higher than that, and then it gave a very, very significant drop, okay? Now, one more time, okay? Because it's going to keep happening. That's the thing that people don't understand. So one more time, you're like, okay, bet. Well, I've identified that this is my new low. So when the market comes back, I'm going to buy it. So maybe, you know, you got a little aggressive. You're like, okay, bet I'm going to buy this again. Okay, I made a little bit of money. Then you're like, well, wait a minute. It's coming back. Let me try to buy it again. But then what does the market do? Okay, so once again, we can now take this, right, and move it over. So if you see right here where I can show you guys, this low is where you would probably have your stop loss, right? Look at what the market did. The market actually came, dropped slightly below, and then it went in your given direction, okay? So these are the things I want you guys to be able to understand. Whenever you're noticing a consolidative market, even though it may look good and may look juicy, a lot of times you're going to get pump faked, and a lot of times you're going to lose a lot of money. So where would I have actually looking, right? Where would I looking is not even a word. Where would I have actually looked, Tyree, to get into this trade idea? Okay. I'm going to show you guys, right? I'm going to show you guys. Now, there's a couple of different ways that you guys can look at this, okay? So this area right here would have been the first area that significantly broke below this entire zone. As you can see, the market gave a pullback, right? Now, within this pullback, which is now going to be identified as the correction because it looks like the market has officially broken the structure, okay? Has officially broken the structure. We can now be looking for opportunities to take a short, okay? Now, depending on where you get in, because this is not a video about, you know, entry, but the concept of it is the way that you would like to play consolidation is you would like to wait until maybe that support gets broken, which happened here, okay? And then from there, maybe you can look for your opportunities. Now what I want to do is I want to look for one more, you know, example of a consolidative market real quick. So I can actually identify this right here. So one more example, guys, I want to be able to show you. Now look at this, okay? So if you guys can see, right, this entire zone right here, notice how many times the market is touching the same area and it keeps rejecting, okay? Now, vice versa, look at this zone down here. All of this is consolidation. So within this entire box, right? Within this entire box, this is considered consolidation. Notice how the market is not moving strongly in either given direction. It just keeps coming back to this ceiling or to this floor before it rejects, okay? This was pretty much the last little fake out move before the market decided that it wanted to explode to the upside. So a lot of this is dangerous to trade in if you guys don't actually understand, you know, how to be able to identify what you're looking at. So this is going to be consolidation, guys. Hopefully you guys were able to come here. Hopefully you guys were able to learn effectively. I always recommend using USD pairs to be able to practice things like this because they move a lot smoother. So with that being said, if you guys appreciate the video, let me make sure y'all guys go ahead and hit that subscribe button, okay? Because like I said, YouTube needs to be able to see that you guys are appreciating the value, which I know that y'all do. Otherwise, y'all wouldn't keep coming back. Next thing I would appreciate is if you guys can leave, you know, a thumbs up. YouTube is going to use that in the algorithm to be able to identify, once again, y'all rock with your boy. Let me get y'all to like, comment, share this video with somebody who, you know, might be struggling with market structure and things of that nature. And then finally, make sure y'all go follow your boy on Instagram at official Tyree Samuels. And as usual, I'm going to see you guys at the top, not from the top, because the bottom is way too crowded. See you when you want to be. Peace.